Shahzad Kazi is China Beige Book's COO and Managing Director. Shahzad, great to have you with us. They can't stimulate the economy out of this to 5%? They can't do it this time?
Well, so right now, you're not getting much in the way of big stimulus announcements. And I understand part of it, right? Our data showed you had a pretty decent January. You had acceleration into February. So maybe the pressure to announce something big is not there right now. However, they've said they want to now make consumer spending the growth driver. It's the #1 priority. Well, then how about you highlight something and how you're going to stimulate households? They did basically nothing on that front.
In terms of tariffs, do you think we'll see a lot of pull forward? I mean, that will probably distort the numbers that we get out of China for the near term, at least.
Yeah, I think that's what's going on. So you had a pretty good manufacturing, data point that came out in February, for example, including a jump in export orders, and that is the pulling forward of growth because you've got that front-loading effect still in place, which means down the road, a few months down the road, second half of this year, that sets up a potentially sour a picture for the manufacturing sector specifically.
Shahzad, help us understand kind of the game theory in China, because historically, look, China's historically been more concerned about social control and dynamics sometimes than they have been about their economy. In a world where they're at trade war with the United States, what's more important, to be tactically agile and to actually be able to respond in a trade war, or actually think about their own economy? Are they just reacting right now, or do you think they're actually playing offense on their own agenda?
So their capacity to play offense is pretty limited just because of the fact that we import so much more and they import very little, so they can't do much. So you can get a lot of tough talk out of them, but, not much in terms of action. Their other side, of course, is what do you do to help the economy? My guess is that they go back and stimulate the manufacturing base. They go back and stimulate or help the exporters rather than being able to make the big, bold decisions on transforming their economy, which is what they really need.
So, Shahzad, we could be seeing a scenario there where the economy is what it is. You're concerned about it, but the stocks that make up the FXI, I mean, it's a 3-year high now in the FXI, and I think Tim would agree with this. I think it's just getting started. I mean, are we in that sort of paradigm shift right now?
You could be, because, look, they want to have technological independence from the U.S. and they want technological dominance, right? So that could power a lot of these companies. That's where the geopolitical risk comes in. If you have an administration that gets very serious about outbound investment restrictions, that's obviously a concern. Export controls get amped up. That's obviously a concern. So that's where I think we have to monitor U.S. policy and not just where Beijing is going, which, of course, they are using the private firms to strengthen the state, which temporarily should be very positive for stocks.
What does a deal between Xi and Trump look like? He talks about it. He's optimistic about eventually doing a deal. This is 8 years now, where we've had this level of hostility. What does the deal look like?
Look, I don't know if there's a big deal to be had this time around, especially given the big failure the Phase 1 deal was. So, perhaps you can get China to agree to start buying more if you want to just reduce those numbers. But if you have a desire to move supply chains out of China, if you have a desire to cut them off from access to high-end technology, I don't foresee there being a deal reached anytime soon. And let's talk about fentanyl. What promises can they possibly make and deliver? They've been promising for years, but it's not led to much. So if you hold them to the same standard we're holding Canada and Mexico, a deal seems even farther out of reach.
I'm just curious about your comments on front loading, because investors in the U.S. have been asking companies about this and not getting a lot of information. So how big do you think this front loading's been? How long has it been going on in any particular industries that jump out?
It's certainly been happening since, the second half of last year. So the idea, as President Trump's election chances look better, we saw it start. And of course, it's kicked off in high gear since then. The question is it about to get tapered off? Are we done now? Obviously, tariffs are in place.